You have an 820 credit score. You've never missed a payment. You check Credit Karma every week like it's your bank balance. Your friends ask you for advice. You feel responsible, successful, like you've figured out the system. But here's what nobody is telling you. Your perfect credit score isn't proof that you're winning financially. It's proof that you're the banking system's favorite customer, and their favorite customers aren't the ones getting rich. They're the ones generating the most profit. For the banks, let me introduce you to Sarah. She's 34. Credit score of 847, top 1% of all Americans. She's never missed a payment in her life. She has 5 credit cards, all with perfect payment history. A car loan she's never been late on. A mortgage that's always paid on time. Student loans she's been chipping away at for 12 years. Her credit report is flawless, a financial masterpiece. Sarah makes $95,000 a year, and she has $8,400 in her savings account. That's it. After 12 years of perfect credit behavior, she has less than 3 months of expenses saved. How is this possible? Because the credit score system isn't designed to measure wealth. It's designed to measure your reliability as a borrower. And the best borrowers aren't the richest people. They're the most compliant people. The people who play by the rules, take on debt responsibly, and pay interest for decades without complaining. Think about what actually gives you a high credit score. Payment history, 35% of your score. That's just proving you pay your bills on time like a good customer. Credit utilization, 30%. That's proving you have credit cards but don't max them out. You're using debt, just not too much. Length of credit history, 15%. That's rewarding you for being in debt longer. Types of credit, 10%. That's rewarding you for having multiple kinds of debt. New credit, 10%. That's penalizing you for trying to get out of the system too quickly. Notice what's missing? Net worth, savings, investments, income, assets. None of that matters to your credit score. You could have $5 million in index funds and no credit score at all if you've never borrowed money. You could be completely financially free, own your house outright, have zero debt, and the credit bureaus would treat you like a ghost, like you don't exist. Meanwhile, someone drowning in debt but making minimum payments on time has an excellent score. The system is measuring your obedience, not your wealth. And the more obedient you are, the more profit you generate for lenders. Here's how the trap actually works. You start building credit in your early 20s. Maybe you get a secured card or a student credit card. You use it responsibly, pay it off every month, and your score starts climbing. You feel good. You're doing what you're supposed to do. Then you take out student loans. $40,000, $80,000, maybe $120,000. But it's okay because you're building credit. Your score goes up. You graduate and get a job. You need a car. You could buy a $8,000 used car in cash, but the dealer offers you financing at 4.9%. Build that credit, they say. So you take the loan. $25,000 over 60 months. Your score goes up again. Now you're making good money and you want to buy a house. You've been renting, saving for a down payment, and your credit score is pristine. You qualify for a great mortgage rate. 3.5%, 4%, maybe 6% if you're buying recently. You're so proud. You lock in a 30-year mortgage for $350,000. Your credit score jumps to 780. You're winning. But let's actually calculate what you're paying. On that $350,000 mortgage at 6% over 30 years, you're going to pay $405,000 in interest. Nearly $500,000 in interest alone, on top of the $350,000 you borrowed. You're going to pay $755,000 total for a $350,000 house. And every month you make that payment on time, your credit score stays beautiful. The banks love you. Add in your car payment, $450 a month for 5 years. That's $27,000 for a car that costs $25,000. Add your student loans at 6.5% interest. You'll pay $60,000 in interest on $80,000 borrowed over the standard repayment period. Add credit card interest if you ever carry a balance, even occasionally. Even at 0% promotional rates that convert to 24% APR later. Sarah, our credit score champion, has paid over $95,000 in interest over her adult life. She's paid banks $95,000 for the privilege of having an 847 credit score, and that number is going to grow every year for the next 20+ years until her mortgage is paid off. She's on track to pay $300,000 in total interest by the time she's debt-free in her 60s. But here's where it gets psychologically devastating. Sarah feels good about her credit score. She checks it regularly. She sees it go up and she gets a little dopamine hit. I'm doing great, she thinks. I'm responsible. I'm an adult. The system has gamified her own financial extraction. She's literally getting pleasure from the score that measures how much profit she's generating for banks. This is the genius of the credit score system. It created a metric that makes you feel successful while ensuring you stay in debt. It turned borrowing money into a status symbol. It made paying interest for 30 years feel like winning, and it convinced an entire generation that building credit is more important than building wealth. Now, let's talk about the people with no credit score, the invisibles. The people who buy cars in cash, rent instead of buying with mortgages, never use credit cards, and pay for everything with debit or actual money. The credit bureaus literally call them credit invisible, as if not being in debt makes you not exist. These people are often in better financial shape than the high credit score crowd. They have higher savings rates. They own assets outright. They're not paying interest to anyone. But according to the credit system, they're failures. They can't get approved for mortgages as easily. They pay higher insurance rates in states where credit scores affect premiums. They get penalized for not participating in the debt system. I know someone, let's call him David, who retired at 48. He has zero credit score, literally zero. He's never had a credit card, never had a car loan, never had a mortgage. He bought a small house with cash in his 30s. He drives a 15-year-old Toyota he bought used for $6,000 10 years ago. He has $2.3 million in index funds and rental properties he bought with cash from saving and investing aggressively. If David tried to get a mortgage today, he'd be treated like a risky borrower. Despite having $2.3 million in assets, despite being financially free because he has no credit score, the system punishes him for opting out. Meanwhile, someone with $80,000 in debt, $5,000 in savings, and an 820 credit score would get approved instantly and celebrated as financially responsible. This is insane, but it's how the system is designed to work. Banks don't make money from wealthy people who don't need loans. They make money from reliable borrowers who take on debt and pay it back slowly with interest over decades. The credit score system exists to identify and reward the best long-term customers, not the wealthiest people, the most profitable people. Let me show you the alternative path that nobody talks about. The path that destroys your credit score but builds actual wealth. You graduate college, you have student loan debt. Instead of taking 20 years to pay it off while maintaining a perfect payment history and great credit score, you go scorched earth. You live like you're poor. Roommates, rice and beans, no vacations. You throw every extra dollar at the debt and pay it off in 3 years. Your credit score during this time, it barely moves. You're just paying off debt faster than required. You're not opening new accounts. You're not diversifying your credit mix. The bureaus don't reward you for destroying debt quickly. They reward you for paying it slowly over time. But you don't care. You're getting out. Next, you need a car. You save $10,000 and buy a reliable used car in cash. No car payment, no interest, no credit building. Your score doesn't improve. But you have $450 extra every month that someone with a car loan doesn't have. You invest that $450 every month for the next 30 years at 8% returns. That's $598,000, more than $500,000 because you refuse to build credit with a car loan. You want a house, but instead of rushing into a mortgage, you rent cheap and invest the difference between cheap rent and what a mortgage payment would be. You do this for 8 to 10 years while maxing out retirement accounts and building a taxable brokerage account. Your credit score? Stagnant. You have no new debt, no mortgage, nothing for the bureaus to score, but your net worth is growing by $40,000, $60,000 per year. After a decade of this, you have $400,000 invested and maybe $150,000 in cash. You buy a house, not with a mortgage, with cash, maybe not your dream house, maybe a modest starter home, but you own it outright. Zero debt, zero interest, zero credit building. Your credit score actually might drop because you have no active accounts reporting. But here's what you have instead. Complete housing security, no mortgage payment, no risk of foreclosure. And that $2,500 per month you're not paying to a mortgage, you invest it. Another $2,500 per month invested for 20 years at 8% returns is $147 million. Plus, the $400,000 you already invested is now worth over $1.8 million with compound growth. By age 50, the no credit score person has a paid-off house plus $3+ million in investments. The high credit score person has a house with 15 years left on the mortgage, maybe $300,000 in retirement accounts, and is still making payments on everything, still paying interest, still generating profit for banks, still checking their credit score and feeling proud of their 825. The math is brutal when you actually run it. Every dollar of interest you pay to maintain good credit is a dollar you can't invest. And that dollar, invested over 30 years, becomes 10 plus dollars. You're trading massive future wealth for the feeling of being creditworthy today. But the system makes it so hard to see this because everyone around you is playing the credit game. Your parents tell you to build credit. Your friends brag about their scores. Financial advisors tell you to maintain good credit for financial flexibility. Employers check your credit score. Insurance companies use it for rates. Landlords require it. The entire economy is structured to force you into the credit system, whether you want to participate or not. This is why the credit score system is so perfect for banks. It's not just a measurement tool, it's a social control mechanism. It makes opting out of debt nearly impossible without significant life friction, and it makes staying in debt feel like the responsible choice. Here's what I want you to understand. Your credit score is not a measure of financial health. It's a measure of how profitable you are to lenders. An 850 credit score means you're the perfect customer. You borrow consistently, you pay back reliably, and you do it slow enough to generate maximum interest revenue. You're the ideal profit center. A 0 credit score could mean you're financially independent, or it could mean you're terrible with money and can't get approved for anything. The score itself tells you nothing about wealth, only about debt behavior. And the fact that we've all been trained to optimize for the score instead of optimizing for wealth is the whole scam. Now, I'm not saying credit is pure evil or that you should never use debt. Strategic debt for a business that produces income? That can make sense. A mortgage at 3% when you can invest the down payment money at 10% instead? That's math that works. Using credit cards for points and paying them off in full every month? That's gaming the system in your favor. But building credit for the sake of having good credit? That's falling for the trap. Taking on debt you don't need just to build your score. That's paying banks for the privilege of being measurable. Being proud of your high score while having minimal savings? That's confusing the scorecard with the game. The financially free people I know have wildly varying credit scores. Some have great scores because they strategically use credit cards for points and pay them off. Some have mediocre scores because they haven't borrowed money in years. Some have no score at all because they opted out entirely. But all of them have one thing in common. They don't care. The credit score is a tool to them, not a goal. And usually, it's a tool they barely use. Meanwhile, people trapped in the salary trap, the consumption trap, the keeping up with the Joneses trap, they care deeply about their credit scores. They check them constantly. They feel pride when the number goes up. They don't realize that their rising credit score is correlated with their lack of wealth. The more debt they responsibly service, the higher the score, the poorer they actually are in real terms. So here's what you should do if you're currently obsessed with your credit score. First, stop checking it. Seriously. Delete Credit Karma. Stop monitoring something that measures your value to lenders instead of your actual wealth. Second, calculate your total debt and your total interest payments over the life of that debt. Actually look at the number. That's what your good credit is costing you. Third, make a plan to eliminate debt as fast as possible, even if it means your score stagnates or drops. Getting out of debt builds wealth even if it doesn't build credit. Fourth, start building assets that generate returns instead of debt that generates interest payments. Every dollar you're paying in interest is a dollar you could invest. The opportunity cost is staggering when compounded over time. Fifth, stop using credit score as a measure of success. Your net worth is the only score that matters. How much you own minus how much you owe. That's the real measurement of financial health. If you're sitting here thinking, but I need good credit for a mortgage, I want you to really examine that assumption. Do you need a mortgage? Or could you rent cheap, invest aggressively, and buy a house with cash in 10 years? Yes, it requires delayed gratification. Yes, it requires living below your means. But the financial outcome is vastly superior. You end up with a paid-off house plus massive investments instead of a mortgaged house and minimal savings. The credit score system has convinced you that getting approved for debt is success. That's backwards. Not needing debt is success. Being able to pay cash for things is success. Having so many assets that borrowing money would be unnecessary is success. An 850 credit score just means you're really good at the thing that keeps you from becoming wealthy. Servicing debt. Here's your homework. Calculate your net worth. Assets minus liabilities. That's your real score. Then calculate how much interest you're scheduled to pay over your lifetime on your current debts. Mortgage interest, car loan interest, student loan interest, everything. Look at that number. That's what your good credit is costing you. That's the price of admission to the credit score game. For most people, that number is $200,000 to $500,000 over a lifetime. $500,000 paid to banks for the privilege of having an excellent credit score. $500,000 that could have become $2–3 million if invested over the same time period. That's the real cost of the credit score scam. Now you have a choice. Keep playing the game. Keep checking your score. Keep feeling proud of your 820. Keep paying interest for decades, or opt out. Destroy your debt. Stop worrying about the score. Build actual wealth instead of creditworthiness. One path makes you look successful. The other path makes you actually successful. The banks are betting you'll choose the first path because that's the one where they profit. The question is, are you going to let a 3-digit number designed by lenders for lenders control your financial decisions? Or are you going to optimize for the only score that actually matters, your net worth? Comment below your current credit score and your current net worth. No judgment, just data. I guarantee we'll see people with 800+ scores and negative net worth, and we'll see people with no score and $500,000 in assets. The correlation will be weak or inverse. Because credit scores measure debt behavior, not wealth building. If this changed how you think about credit, hit that subscribe button. We're going to keep dismantling the financial myths that keep people poor while making them feel responsible. New videos every week. Each one is going to make you question something you thought was true. The credit score scam is real, it's sophisticated, and it's incredibly effective at keeping people in debt while making them feel successful. But now you see it. Now you can't unsee it. The only question is what you're going to do about it. Thanks for watching. Stop building credit. Start building wealth.